Hey, Mike, got to interrupt you because C3.ai results are out. Let me run through them real quick. Revenues a miss, 73 million versus 74.3 expected. Loss per share better than expected, a loss of 13 cents versus 18 cents expected. Guidance is a bit light. Tom Siebel, CEO, joins us now right before the call. Tom, I did not get a chance to see remaining performance obligations in here, which would, I guess, get a sense of remaining demand. Normally, you got that at the top of the release. How does that look, and what do you have to say about the state of demand?
Well, demand is up, John. It was a solid quarter. Year-over-year revenue growth in the federal unit was 100%. In the U.S. was 28%. Bookings growth year-over-year was 100%. New contract were up 140%, 48% year-over-year. RPO will go down, and it will continue to go down as we transition from subscription-based pricing to consumption-based pricing. So RPO ultimately approached zero as we move to consumption-based pricing. But
Gotcha.
what we have here, so it was, it was a pretty solid quarter. Demand is good.
So on federal in particular, is that what you expected? And given that revenues were a bit below the midpoint of your guide, where does the federal strength fit in with what you saw from the rest of the business?
Federal unit was exceptional. U.S. unit was solid. Europe unit was our European sales unit organization did not perform well, and we have implemented a reorganization there to get that back on track.
Tom, just to dig into federal a little bit more, I mean, the last time you joined us, you talked about how defense specifically was the most rapidly rising industry. Is that still the case? And do you think investors fully appreciate what that opportunity looks like for the company?
It is the defense business is a big business, whether it's predictive maintenance for aircraft, contested logistics for Transcom, predictive maintenance, stochastic optimization of supply chain. Defense is a big business for us. I think it's probably roughly 15% of our business overall, but it is our most rapidly growing business.
So when we look at the outlook, we were just talking to Lisa Su over at AMD, who's raising her estimate of the total addressable market. Your outlook is a bit light of what analysts were expecting. So can you break down what your expectations are and the areas from which you feel like that demand's really going to come?
John, our revenue outlook for the year remains unchanged. It is the same as it was last quarter, so we didn't change it. That being said, there's no question with the advent of generative AI, I think our addressable market has more than doubled. So it's the addressable market is huge. There is nobody that doesn't want to talk about generative AI, both standalone and with our application. But I would estimate our market is more than doubled this year.
Can you say more about the go-to-market? And I know you mentioned specifically that you're making some changes in Europe based on what happened in the quarter. But overall, are there shifts happening in how you're going to market and even in how you're dealing with partnerships?
Yes. For example, with AWS, we've made a number of announcements of our strengthening partnership with AWS. And now last week, we announced the availability of C3 Generative AI on the AWS marketplace. So you can sign on right now and order it. So this is this idea as we go from 6 customers to 60 customers to 6,000 to 60,000. So this is an opportunity for exponential growth. And this is a market, this generative AI is a market that you can expect us to be investing in, substantially in human capital, in engineers, in data science, and in market development in the short term.